Hi there, welcome back to Market Fatafat. Before we bring our next guest on board and take you through all the buzzers in today's trade, let's go across and listen in to an exclusive story coming in. Apple is doubling down on India as a key manufacturing hub. ET now learns that the tech giant could shift 25% of its global production to India by the end of this year as part of its strategy to make the supply chain more resilient. My colleague Sumita Karir is bringing us all of those latest details. Sumita, take it away.
Yes, even as Trump administration 2.0 is about to be sworn in just the next couple of days, sources say that Apple could look at shifting production substantially to India, and it could shift 25% of its production to India during this year itself, by the end of this year itself. In fact, sources also suggest that Apple could look at increasing those targets more than 25% as well. Now, Apple's current production value in the country, in India, is around 14%. So Apple is looking at expanding that, even as Trump has threatened to levy 100% tariffs on China. That tiff between US and China, if that escalates, then Apple could look at India to make its supply chains even more resilient. Now, currently, India produces iPhone models 12, 13, 14, 15 and 16. In fact, Apple also emerged as the most valued smartphone brand in 2024 H1. And Apple's iPhone production hit the $10 billion mark in the period between April to October 2024. And in the same period, about $7 billion worth of iPhones were exported from India. And we did try to reach out to Apple for a comment on that. Apple hasn't responded to that. But if you remember, as far as Apple's India strategy is concerned, even Tim Cook during the earnings call in Q3 said that we did grow double digit in India. So we're very pleased about it. In fact, it was a new March quarter revenue record for the company. And now Apple is looking at further capitalizing on its India market.
All right, moving on then, we'll get Arpit Beriwal, who's the manager of derivatives analyst, equity research, Motilal Oswal Financial Services, who's joining us now on the technical charts, and from our research team, Ria is joining us back. Hi Arpit, thank you so much for joining us today. Let's get started with your first pick then. M&M is the name that you picked out for us. Now, from the auto pack, this is one counter that has done pretty well. In fact, in the last 1 year, it has given returns of 90-odd%. Given how the auto pack is doing right now, do you see more up move on this?
Very good afternoon, everyone. So if we talk overall, if we see the auto index seen a sharp correction in last couple of months from October series to December. We've seen decent correction in October in auto stocks overall. However, if we see M&M, so M&M has been a huge outperformer. So technically, if you talk about M&M, this whole counter has been near its life high territory. So technically, on the monthly scale, the stock is consolidating from last 3 to 4 months and holding in high levels, in spite auto index seen a correction of almost 15 to 20%. So weekly scale, it is also trading higher above the short-term moving averages. On the daily scale, it has retested its previous breakout zone. And if we see last couple of days, we've seen a decent correction in market, but the relative strength of the stock is quite strong and trading above the short-term moving averages. Barely near its lifetime high trading. So overall setup wise, it is the strongest counter within the auto pack. And as soon as we see some recovery in the market going forward, so this stock is likely to outperform in coming weeks. So M&M would be a preferred pick within the M&M space, within the auto pack, and we can go long at current levels for minor dip in between 3080 to 3100 zone, with keeping stop loss of 3000 for an upside move towards 3200 and then new life high towards 3250, 3300 zones.
Okay, so those are the levels to watch out for on M&M. Let's shift focus from autos, talk about metals. The entire metal counter is in focus in the back of a JP Morgan note coming in, and they say that this is the lower price targets across the coverage universe for their brokerage company, and they're factoring in weak volumes and tight spreads. Outlook remains challenging due to soft production growth, recent decline in iron ore prices and announcements of Karnataka mineral tax. They say that Indian steel prices are at the bottom level and HRC has declined by 5% sequentially. Any imposition of a safeguard duty on steel import can drive a modest uptick. The fall in HRC prices in India and Europe will impact profitability for steelmakers. JSW EBITDA to decline by 8% sequentially. Tata Steel can report a 28% cut in sequential EBITDA as well. They're saying SAIL can report a sequential EBITDA growth due to the higher rebar prices, and NMDC's EBITDA could increase sharply by roughly 70% due to price hikes. Now, when you talk about the target price adjustments that the brokerage has made, JSW Steel is the top pick. They've maintained an overweight rating, but the target price has been cut to 1,010 rupees from 1,065. JSW Steel, however, is up on the back of a good Q3 update coming in. For Tata Steel, they've maintained overweight rating, with the target price has been reduced from 170 to 155. Hindalco maintained overweight 2, target price cut to 710. Coal India, they've maintained a neutral, target price has been cut by 35 rupees. SAIL, they've maintained a neutral rating with the target price at 125 versus 133. Vedanta, they've maintained a neutral, and NMDC, they maintained an underweight with the target price at 57 rupees. That's the entire outlook coming in from JP Morgan on the metal space, and all of these counters are in focus today.
All right, those are the metal pack in focus on the back of the note by JP Morgan. But another counter that is in focus is Coal India on the back of a note by Motilal Oswal. Ria, take us through the notes then.
Well, yes, so Motilal Oswal has come out with a note on the stock. They've reiterated a buy rating with a target price of rupees 480, which indicates an upside of around 29%. Now, Coal India has recently reported a production of 202 metric tons in Q3 of FY25, reflecting a 2% year-on-year growth, and the sluggishness in volume growth was primarily attributed to erratic monsoons in coal-producing states, as well as disruptions that were caused by the general and state elections. Now, Motilal expects a power demand to increase in tandem with GDP growth in the near future, which will benefit the company as a dominant coal supplier, and they expect Coal India's production volumes to clock a 6% CAGR over FY24 to 27. The expected capex of INR 200 billion in FY25 and in FY26 each is going to drive product diversification and portfolio mix growth as well, and higher e-auction volumes are going to improve overall realization and margins, and they believe that e-auction premiums will remain buoyant at 60% odd in line with the past average of 55 to 70%. So Coal India remains the top pick in the metals and mining sector for Motilal, although the stock is seeing some selling pressure as we speak.
Okay, so that's the outlook coming in on that stock. Just want to address the flashes on the bottom of the screen. On the screen, the SpiceJet stock is in focus. They are going to be ungrounding 10 aircraft by mid-April of this year, including the 737 MAX. This is what we are getting from agencies. And if they're ungrounding 10 aircraft, then we can expect to see some spike coming in on the stock, and that's what's happened in the last couple of minutes. We'll keep updating you as and when we get more on that. But SpiceJet is looking pretty okay for now. But Ankita, take us through your next stock.
All right, the next stock in focus is Eicher Motors. CLSA is maintaining a hold on Eicher Motors with a target price of 4,883 rupees from an earlier 4,909 rupees. Management is aiming for higher volume growth, targeting improvement, cushioning the EBITDA margin through scale benefits. They're looking to grow by refreshing the 350cc and 450 and 650cc segments. In the near term, they plan to expand the assembly capacity to 1.4 million units per annum from the earlier 1.2 million, but now by adding new painting and chrome plating facilities. Now, replacement demand is currently at 7 to 8% of the domestic wholesale. Replacement demand is set to increase soon. The top 20 and top 50 cities currently contribute 25 to 45% of the volume, implying a strong presence in the semi-rural markets. And on the back of that note, Eicher Motor is in focus today, currently declining with seeing some profit booking coming in with a cut of 1.5%.
Okay, Eicher Motors in focus on the back of a CLSA note, but coming to you now, Arpit, you've picked out Bharti Airtel for us on the charts. This stock has had a very good last 1 year, coming in up more than 50%. Last 3 months, however, it's been slightly under pressure. What's the outlook on the charts for this stock now?
Yeah, so if you talk about the telecom space, within the telecom pack, this has been a preferred pick. So if we see last 3 months, market has been quite volatile, and in fact, Nifty and Bank Nifty has been corrective phase. Within that, selective stocks has outperformed, and they are likely to outperform going forward also. So last 3 months chart, if we see Bharti Airtel, it has been trading in a broader range between 1580 to 1720, 740 levels. Last 6 weeks, the stock is stuck in a range between 60 points. However, if we see the market has corrected sharply, but the stock is holding well on the weekly and daily scale. On the daily scale, it has managed to surpass 50 DEMA, and then closing above 1620 can definitely see some uptake towards 1680, 1700 levels. So the relative strength of the stock is quite strong, and within the telecom space, this is a preferred pick. One can go long in between 1610 to 1620 for an upside move towards 1700 plus zone, with keeping stop loss of 1560.
All right, moving on then. Ria, coming to you. IRCTC is the name that you picked out for us. That is again a brokerage candidate. Macquarie has come out with a note on it. Tell us, what does the note say?
Well, yes, Macquarie has come out with a note on IRCTC. They've initiated coverage with an outperform rating and a target price of rupees 900, indicating a 20% upside. Now, they say that IRCTC enjoys a monopoly position for the Indian Railways and e-ticketing and catering services segments, and it also has an 80% market share in the India ticketing business. Now, Macquarie has highlighted that the upgradation of India's train fleet and improving contribution of ad revenues along with faster launches of new premium trains is going to help growth going forward. Now, the key catalysts include modernization of railways. In catering specifically, as India modernizes its railway stations, the company will benefit from an increasing number of restaurants and stalls setting up outlets, and the company is also going to benefit from food delivery apps who share about 15% of its value for access, and it generates 30% free cash flow margins and 30% ROE and ROIC at the moment. They see a path of around 2x returns linked to India's railway modernization ambitions. So bullish note coming in from Macquarie on IRCTC, and the stock is up around 3% as we speak.
Okay, so that's the news flow coming in on IRCTC on the back of that brokerage note. But while we are talking about IRCTC, we also have an exclusive story on that. Mega preparations are underway in Prayagraj to host the Mahakumbh Mela, where thousands of devotees, seers and sages are expected to gather. My colleague Samir caught up with Rahul Himalayan, the Director of Tourism and Marketing at IRCTC, to get their take on the tent city and launch of Bharat Gaurav train for the Mahakumbh Mela. Let's go across and listen in.
As you know, IRCTC is a Schedule A mini Rattak PSU of Indian Railways, of the Ministry of Railways, and this occasion is a grand occasion. Mahakumbh, after 2013, after 12 years, it is being performed in Prayagraj in 2025. So in this occasion, IRCTC is also doing something which is being done for the very first time.
Okay.
IRCTC is setting up its Mahakumbh Gram IRCTC tent city, which will consist of two kinds of accommodation, that is the super deluxe tents and the villa accommodation tents. So this tent city, which is located at Arel Ghat, which is very close, only just about 500 meters from the bathing ghats and around 3.5 kilometers from the Triveni Sangam. So this venture of IRCTC of setting up a tent city is for the very first time, and we are expecting bookings. Bookings have been very promising till now. Future bookings also we are expecting very nice on the Snan dates and as well as on the non-Snan dates.
Okay. So what is the number? I mean, in terms of the villas or the other suites that you have established. So what is scale that you have put in? And initially you say that you have got a very promising response. If you can just take us to a bit more details.
Yeah, so as far as the inventory is concerned, so there is no limitation on the inventory, but first of all, we have started off with some super deluxe villa in the ratio of 4:1. There are around 80 super deluxe and 20 villas.
Okay.
But if we get more bookings, we can expand it into the inventory out there. These 100 belonging to a cluster which is exclusive to IRCTC, called IRCTC Mahakumbh Gram Tent City, is being filled by the online booking of www.irctctourism.com.
Okay.
So we have got bookings of around 800 plus tent nights. This we are also trying to increase through our Bharat Gaurav trains.
All right, with that, it's time for a quick breather. You don't go anywhere. We'll be right back with some more buses on the other side. Alright, welcome back to Market Farafat, where we are taking you through all the stocks that are in focus today. So Bajaj Finance is a counter that is in focus today on the back of a brokerage note by CLSA. They're maintaining an outperform with a target price of 9,200 rupees. The PAT compounding is likely to restart in FY26 after a year of downgrades is what CLSA feels. Also, the topic in the financial space, they forecast a 25% AUM CAGR and a 27% PAT CAGR over FY25 to FY27. And also they expect the stock to deliver returns at least in line with the earnings growth and the estimate of 20 basis point improvement next year in the credit cost. And on the back of that, CLSA is positive on Bajaj Finance. It has given up those morning gains, but nonetheless trading flat in the green right now.
Okay, so that's Bajaj Finance in focus. Arpit, you picked out Bajaj Finserv for us. Last 1 year, the stock has done absolutely nothing. It's as flat as it could be. Tell us what's the outlook on this stock going ahead, because last 3 months also it's seen some kind of a consolidation coming in. So what's the outlook? Are you penciling in better days, or can we expect this flattish momentum on the stock to continue for some more time?
Yeah, so if we talk about all the NBFC and financial stock space, Bajaj Finserv has relatively outperformed. If we see the last couple of months chart, a good rally was seen from 1400 to 2000 levels. I mean, last corrective phase of financial sector, the stock corrected from 2000 to 1700. However, we see in this month, a strong recovery was seen from lower levels, and on the monthly scale, it has negated the formation of lower highs after 3 months. On the weekly scale, it has formed a morning star pattern, that is a bullish price reversal pattern at the support zone. On the daily scale, in spite of the market weakness, the Nifty and Bank Nifty and financial services are correcting, but Bajaj Finserv is holding strong. So on the daily scale, the stock is consolidating from last couple of days, and in the formation of pole and flag breakout, that is also a bullish price pattern. So looking on all the multi-time frame analysis and within the sector also, the stock has been quite outperformer. So the risk reward is quite favorable at current junction, and one can go long in Bajaj Finserv in the range of 1690 to 1710 levels, with keeping stop loss of 1620 for an upside move towards 1800 and then 1840 levels from a positional point of view.
Okay, so that's the outlook coming in on Bajaj Finserv. Let's talk about the entire pharma space, and even within this space, one pocket of stocks are in focus today, and that's the companies that are CDMO players. You have Jefferies that's come out with a note saying that calendar year 25 will be a decisive year for earnings performance in the CDMO space. Strong earnings growth is expected, but slippages could impact higher valuations. The key triggers to this could be the US policy shift. Remember, the Biosecure Act was in focus recently. Biotech funding trends are also going to be an important trigger. They remain selective with Piramal Pharma as the top pick, and moving on, they also say that Syngene International is going to be in focus. They've upgraded that stock to a hold from an underweight. Target price of 890 rupees, up from 740 earlier. Gland Pharma, they've downgraded that stock to an underweight rating from hold. Target price of 1630 from 1840, and for Lotus Labs, they've maintained an underweight rating. Target price of 450 rupees, hiked from the earlier 300. So that's the view coming in from Jefferies on the CDMO space. They're bullish on the pharma counters, but all of these counters are lagging away in today's trade.
Alright, CDMO players in focus today, lagging behind on the back of that note. But moving on to you, Ria, you picked out IndusInd Bank for us. Tell us what's weighing down the IndusInd Bank. It's trading right now with cuts of more than 4.5%.
Well, yes, so Goldman Sachs has come out with a note on IndusInd Bank today. They have downgraded the stock to a neutral rating from their earlier buy rating, and they now have a target price of rupees 1090 on the stock, which is down about 17%. They've cut the EPS by around 5%, 16% and 18% over FY25, 26 and 27 respectively. The ROAs, they believe, are going to stay lower at around 1.3% over FY25 to 27, and the risk-reward balanced revenue engines have slowed over the last 2 quarters, which have been impacted due to the rising delinquencies in the commercial retail portfolio, MSME and CVs, etc., and slower loan growth as well. So that's the word coming in from Goldman Sachs, and the stock is trading with cuts of around 4.5% as we speak.
Okay, so that's the outlook on IndusInd Bank coming in. Arpit, you picked out ONGC for us. A couple of days ago, this stock was continued to be the top Nifty gainer for 2 days in a row. Then it saw a slight bit of a consolidation. Tell us what the outlook is on the stock going ahead, and do you believe this could be one of the Nifty outperformers for this year?
Yeah, so if you see overall, from last couple of days, market has been bleeding, and especially the broader market has been underperforming. The mid cap, small cap is almost down by 4 to 5% this week. However, if you see selective large caps has been outperforming, and within that also energy space, ONGC relatively better. So if we check the chart on weekly scale, from after last 3 to 4 weeks, it negated the formation of lower highs from a strong bullish candle, and we have seen a good recovery on the daily scale from almost 240 levels to 260 zones. So it has managed to surpass short-term moving averages above 50 DEMA, and today also if we see, we've seen a sharp selling pressure across the broader indices, but in spite of this volatility, the stock is holding strong above its short-term moving averages, and I think risk reward is quite favorable because the stock is at the lower band of the channel, and a good reversal is seen on the weekly frame. So I think slowly, steadily, the stock can head towards 270 to 275 plus levels. So ONGC would be a preferred pick within this space. One can go long at current levels with keeping stop loss of 253 for an upside move towards 270 and then 275 levels.
Right, with with that, we're completely out of time on this edition of Market Fatafat. I'll thank Arpit and Ria for joining us today. Thank you guys. We will let you go on that note. Snehi and I will also take your leave. Thank you so much for tuning in. Don't go anywhere because closing trades is taking the market action forward.
If you like this video, then like, share and subscribe to ET Now.